All right, so this week's Money Mondays was about home equity lines of credit. And I actually, had a lot of shares and I had quite a few questions about it. So I figured I would do a little bit more of an explanation about the process and what I did. So here's a key thing. So if you have equity in your home, right, but your current mortgage is like mine is less than 3%, you're not looking to refinance, because why would you go and just increase your monthly mortgage payment for no reason? Because that's what's going to happen if you go to refinance right now, very frankly speaking. So here's how equity works. I bought my house for $685,000. When I bought it, I put 10% down on the home, and then I put money into renovating the home. Within 6 months, I was able to get my mortgage insurance taken off because the value had appreciated because of the renovations, realistically, and just the market going up. So now my home, I basically owe somewhere around $580 for my house, but it's worth more, right? And that money that it's worth more, not just the $685, it's worth more. It's based on market value. So, I want to try to capitalize on that equity. Now, there are a lot of credit unions that are currently offering home equity lines of credit. Okay. Most of the ones in our area are typically looking to cap, like the max that they will let you loan up to is 80%. So that means that, I'm capped at 80. My lender recommended one to me that they cap it at 90. So what I did was I had to go through the process with them. I had to supply the same type of documentation that I would supply when I'm looking to get a mortgage. They ran my credit. They, obviously they're looking at what are my DTI ratios, etc. They had to do an appraisal on the home. The appraisal came in at $900,000. And then I was basically able to borrow up to 90%, whatever that remaining amount is, up to 90% of the of what is the value. So that's my equity, right? So now I have that money where it's sitting in my home equity line of credit account. And it in essence, I guess the best way to look at it is it's like a credit card. You pay on it if you borrow the money. And so the money's right now sitting there. I'm not borrowing it, so I'm not paying on it. But let's say if I go to use it to go do construction, or my hope is actually like I try to find an investment property, I could parlay the money into an investment property, and then maybe that investment property could hopefully pay for my construction. That's really like my goal. But then, you have those funds then available to be able to use. And it is kind of like having a credit card, but then basically your house provided that funding. Now, I'm not a loan officer. I'm not here to tell anybody what is the best way to do it or anything like that. But I do know that a lot of people have been looking or trying to find ways to tap into the equity of their home, but then you don't want to be penalized. Who wants to pay? I'm not interested in, quite frankly, to pay 6% or 7% on the overall amount. Then you're really just paying it more based on that line of credit amount, and it's all based on what you actually borrow. So let's say if I draw $10,000 from a line of credit, then I'm paying on that $10,000. I'm not paying on the overall amount that I took. And that's how that works. So if that's something that you're interested in taking advantage of with regards to the equity of your home, use it wisely. Don't just look at your home as a credit card and then think when you sell it, you're going to automatically just walk away with some crazy money then at that point or anything like that. Anytime you're looking to borrow money, please try to use it wisely. But yes, that option is available to you.